The budget season is back and the infrastructure theme, which typically gets the highest attention in the budget, is again doing the rounds in the market. Let's do a three-point analysis to really find out if the infrastructure theme could provide an opportunity for investors going forward. 1. Infrastructure in the union budget. Well, recently the government did unveil a roadmap for the 100 lakh crore infrastructure spending over the fiscal years 20 to 25. This is double of what was spent over the last 6 fiscal years as well. However, despite the huge investments, the ground reality is exactly the opposite. The last budget was announced on 5th of July with this big bang announcement of 100 lakh crore rupees of investment in infrastructure over the next 5 years. Now, while they grabbed the headlines, the NSE Infrastructure Index, representing the listed infrastructure companies, has barely added value. Now, even on the longer time frame from 26 May 2014, a day before the present government assumed office, the NSE Infrastructure Index has moved up just 6.25%. 2. Promises versus delivery. Well, it is estimated that during the fiscal years 2013 to 2017, the government aimed at investing close to 56 lakh crore rupees on infrastructure. However, the actual amount of investment was much lower. Slippages were as high as 34% as against the original targets. Now, this time the promise is even bigger. The government has in fact intended to invest close to 100 lakh crore rupees over the next 5 years, which actually translates into an annual investment of close to 20 lakh crore rupees. However, when we look at the current run rate of infrastructure investment in the country at about 7.5 lakh crore rupees, there is a huge difference of roughly about 13 lakh crore rupees annually. Now, by any measure, these figures are tall and thus raises even more suspicion in the light of the past slippages. 3. What should investors do now? Well, one needs to really ask, if a 50 to 70% of the targeted investments are also done, will companies be able to really create value for the shareholders or not? So, the current market capitalization of BSE Infrastructure Index is pegged at around 10 lakh crore rupees. Now, if we remove companies like L&T, GAIL, ONGC, NTPC and even Power Grid, the remaining constitutes about 40% or about 4 lakh crore rupees of the total market cap, which is nothing as against the 81 lakh crore rupees of investment done by the government during the fiscal years 2008 to 2019. Now, the magnitude required to be infused by the private players is also going to be huge, which in the light of the present balance sheet stress, also the equity risk averseness would also be a task. Now, unlike the belief that infrastructure assets can produce reliable and predictable cash flows, they are actually today perceived as unpredictable, volatile and also erratic in nature. Now, investors have to really take a cautious approach while selecting these infrastructure stocks. What looks like a rosy picture right now, in fact, very few companies are likely to create value in the long term.